Welcome and thank you for joining me for Tax Break. This is a podcast about South African tax for South African tax professionals and practitioners. My name is Pieter van der Schwan, and in each episode I share my thoughts with you on a topic or a recent development in South African tax. And I try to do it in just short enough episodes that you can listen to them if you need to take a break to have a quick cup of coffee or just take a walk around the block if you need to get some fresh air. Our topic for today is the first one that comes from a listener. And the question that the listener asked was, when exactly can a vendor claim input tax? So initially, when I thought about this question, a few things came to mind. One, for being that if you look at the definition of input tax, to be eligible to claim input tax, you need to, or the vendor needs to apply the goods or services for purposes of making taxable supplies. Or if you think about certain types of goods or services that you are prohibited from claiming an input tax deduction, for example, motor vehicles or entertainment. Then there's also another possible angle to this was to look at special timing rules. For example, if you're looking at input tax relating to fixed property, often that input tax you can claim it, but only to the extent that you've made payment. But as I started to correspond with the listener, I realized that this is really not the question she's asking. Her question was a lot more basic. It was when, as in what tax period can I claim the input tax? Now, where this question came from is a proposed amendment that was included in the draft Taxation Laws Amendment Bill that was issued in early August. And what that amendment proposed was to say that if a vendor is entitled to deduct input tax, the vendor must deduct the input tax in the tax period during which they become eligible to claim the input tax. It still referred to a 5-year period, but that was a 5-year period during which you could go back into the correct VAT period in which you first became eligible to claim the input tax. And you could go back in the system and then claim your input tax there. But the critical point is that you had to claim the input tax, or the proposal was to claim the input tax in the period that you became eligible to claim it. Now, there were quite a few concerns around this. So I think if you look at from the fiscus's perspective, the main concern that this amendment attempted to address was that ideally for SARS to verify an input tax claim, they should be able to match the input tax to an output tax. So in other words, to test that the VAT system is in balance. Now, with the 5-year current period that you've got, the 5-year window, and I'll expand on that a bit later on, there are seemingly a few issues. One of them being that vendors, whether by mistake or intentionally, claim the same input tax on the same invoice on more than one occasion. Or then I think it's perhaps a lesser issue. But if input tax is disallowed in one period, you could, instead of disputing it, just claim it in a subsequent period. Now, from industry's perspective, the comments focused on systems quite a bit to say, but the systems, both from a taxpayer perspective and from a SARS perspective, are not ready for this type of input tax to match it to specific periods. And if you were to be required to go back in time and make adjustments to previous VAT periods, this could bring its own risks if you keep on making adjustments to prior VAT returns. The outcome of all of this is that the amendment was not made, and the National Treasury undertook to do further consultation with industry before making this change. So I think that brings us back then to the question, what exactly is the rule at the moment? So there's a few pieces, and at the beginning of the episode, I mentioned a few of them. that you need to consider to determine when can you claim the input tax. The first important element that plays a role there we find in section 16.2, and that's the documentation that you need to claim the input tax. So you must have the documentation to be eligible to claim the input tax. So section 16.2 gives a list of documents that you need to keep. It states that that document must have been provided to the taxpayer, so it must have been issued. And for most of these documents, the taxpayer must hold the document. So in other words, the taxpayer must be in possession of a document that complies with the definition of the specific document that's listed. If you've got the documentation, then you need to consider section 16.3 to say, but are you entitled to a deduction for input tax? So that would take into account things like the definition. So do you meet the definition of input tax? There are timing rules, and are you allowed to claim input tax for the specific item, or is it a prohibited item under section 17? If you get to the point of saying, but you've got the documents, you meet all the technical requirements, then the legislation currently says that the vendor may deduct this input tax from the output tax for any period that ends no later, so any VAT period that ends no later than 5 years from a specified date. So for example, in the case of an invoice, 5 years from the date that the invoice that you've got in respect of which you're claiming the input tax should have been issued. And then it's subject to the condition that you must not have claimed that input tax before. And this last bit seems to be where the concern lies. So what it then practically means, if I buy goods or services for my business as a vendor today, I get all the documentation, I can claim the input tax on these goods and services in the current VAT period or any of the VAT periods for the next 5 years. There's nothing that prescribes in which period I need to claim it. Right, so in closing, in what period must you claim the VAT input tax? The status quo as it stands now remains, but I think it's very likely that we'll have a change somewhere in the future. So it's something to look out for, and keep an eye on the legislation as further proposals are made in the next legislative cycle. That's it for today's episode. If you enjoyed the episode, please subscribe on your favorite podcast platform and tell your friends and your colleagues about the podcast. If you've got any feedback or questions, or even a suggestion for a topic as we had today, then you're more than welcome to send me an email. My email address is in the show notes. And as always, just a reminder that this podcast is not intended to be tax advice or a replacement for fact-specific tax advice. Until next time, goodbye.